right, welcome to the FORVAN Financial Show. We are finally going live. My name is Nalish Francis. I am the owner and founder of the FORVAN Financial Firm, and I'm here to teach you guys about credit management. I started FORVAN Financial Firm in 2012, and I have a lot of background in the financial industry. But for me, I have a love for teenagers. I love a love for young people, and I know that you guys are not learning anything about credit management in school. It's something that I have come to understand because of the industry that I'm in. That seeing credit reports over and over again, that many people don't understand credit. Many people don't understand the value of credit and the importance of managing it correctly. And I just decided, you know what, I want to do something for the young people. I want to kind of go out and educate young people and those who are young at heart as well about credit management. I want this to be a bit fun. I don't want it to be boring. I want to be interactive with you guys. And so the FORVAN Financial Show is for you. So welcome to everybody who is watching and who will watch the replay. And for everybody who's on Instagram, welcome as well to you guys as well who will be watching the replay. For Instagram, I know that there's not that much time that we have with you guys today, but if you want to continue watching or want to get the replay in full, you can go to my YouTube channel, which is FORVAN Financial Show, or my website. You could get the link there as well to be able to watch the full duration of the show. Okay, guys? So a little bit about me. Basically, I come from a background of financial services, but initially when I had, as a teenager, had left school, I went and did corrections. I was a correctional officer for a while, and then went back into studies to study financial services because of something that, to be honest with you, was something that one of the young men said to me when I was in corrections, to be honest with you. I used to run programs with phase 2 male young offenders, and every day in programs we would discuss different topics and trying to kind of get the guys to get educated about life and, different things that you have to do when you get out there in the real world, making proper decisions and all of that. But this particular young man caught me off guard one day when he asked me, Miss, I wanna learn about money. I want to learn about money. I want to understand money. I want to understand how things work because, I have seen my mother and my father struggle. They work 2, 3 jobs and they struggle. They can't pay bills. All these different things are always happening, and I don't want that life, right? So for me, I'm ready to hustle. I'm more about hustling and making things happen, and money is what I want to learn about. So he kind of got me thinking when he said that, because to me, I was like, you know what? In my mind, I didn't say it to him, but in my mind, I was thinking about what he said, and I said, it's kind of true, because for me, I grew up in a middle class household with my parents both working full-time jobs, and I still saw where there was a money need, in the sense of there was conversations and arguments around money and managing the finances and all of that, but I couldn't answer his question about money because at that time, I was young. I was about 21 years old when I was a correctional officer and just out of college. So I didn't have that answer, and it just kind of left I guess a little bit of a seed in me where over the years I would continue to think about the question he asked me and kind of was like, okay, I want to be able to answer that question. I want to be able to really understand what's going on, because what he said was true. That was the reality of what I saw as well. Even though we came from different backgrounds, we came from different, life experiences, he was hitting the nail on the head when he said that to me. So that kind of triggered me to go out and study financial services. I went out and, got my license to be a financial advisor. And that's really just, being able to sell life insurance and accident and sickness insurance and, selling certain funds like common sense funds and different funds like that with regards to investing in the stock market and all that kind of stuff, which we kind of might get into a little bit. But this particular FORVAN Financial Show is more about credit management. And why it's more about credit management is because of the journey that I went on trying to get that answer. Once I was digging and digging and digging and digging and digging, the one thing that kept coming up was credit. And I saw that there was a connection between, mismanagement of credit and struggling. Majority of people who have access to credit, which is pretty much as soon as you turn 18, if you have a job and you turn 18, you're going to have access to credit. Or if you, when you graduate from high school and you go to college or university, they're going to be throwing credit cards at you on the campus, because they know that you're in school and they know that you're going to be graduating with a degree or a diploma or certificate, which is going to allow you to get into a specific job. So you'll be able to pay back money, for example, with advancing credit. So with that being said, I noticed that credit reports was a common denominator between everybody across the board, whether you had money or you didn't have money. If your credit was not in good order, then there's that constant struggle that would still continue to be the reality for many. But what was more concerning to me was that pretty much nobody understood credit. Nobody understood why credit was important, what credit really is, and credit scores. I mean, right now, if you turn on the TV, everybody is talking about credit scores. There's these commercials about know your credit score, is your credit good? The conversation has started now within the last year or two. But when I started this company, or my initial company, FORVAN Financial Firm, that was not the case. As a matter of fact, I remember being in college and the professor teaching us about when we pull our client's credit report, we are not allowed to tell the clients what their credit score is. And I thought, but hold on a second. The credit score is the client's credit score. So why can't we tell them what their score is? I remember asking the professor that. And he really didn't have an answer for me. He just said that, legally, we're not allowed to tell clients what their credit score is. So if you wanted to know what your credit score was back then, you would have to either go to Equifax or TransUnion and order your credit score, which you would have to pay for to get it. But the banks, anybody who worked in the financial service industries who had access to pulling your credit, which is something that I did, we weren't allowed to tell our clients what their credit score was. We could only say you're approved for a loan or you're not approved for a loan, and that's it. When they would ask questions, we couldn't give them any information. But for me, that never sat right with me, because in my mind, I was saying to myself, this is their credit score. This is their own personal history of how they manage credit. So if you can't tell them what their score is, and you can't talk to them about credit in the sense of how to effectively manage it, then where are they going to get the knowledge to do this? You're not going to get it at a bank, because it's not the bank's responsibility to teach you about credit. This is all my training of thought, 8 years ago. Now things have changed. Now you can go to the bank and you can actually just pull up your app on your bank and check your credit score. But back then that was not the case. So that's where I started to really dig into credit and the importance of credit, and just kind of going out on a crusade to educate people, young people, especially young people, so that they can understand the value of establishing excellent credit and making sure to take care of their credit. Because if you don't understand the value of something, you're just going to misuse it. You're not going to pay any attention to it. I can always go back to myself as a teenager. Hearing the language of credit in the house was more about credit cards, running up the credit cards. The credit card is maxed out. Those kind of things. I remember my father telling me or speaking to us and saying, make sure when you have a credit card, you make sure you pay it on time. As a young person, I'm like, pay it on time. What does that mean? Pay what on time? What is credit? What is a credit card? So when I graduated from college with credit cards, because as soon as I got to college, they were just throwing them at us. So I made sure I got a lot. But I remember what my father had said, and I remember that he told us to make sure that you pay your credit card back, pay it back and pay it on time. Don't carry a balance. So that's kind of what I did. When I would use it, I would pay it back off. I had cards for different things. So like I'm from Canada, so we have Canadian Tire in Canada. So we'd have the Canadian Tire card. I had a card, use that card to, buy oil to change the oil or whatever it needed. I would gotta go to Canadian Tire and buy it. and then I would pay it back off. So I was establishing excellent credit doing that, listening to my father, but not understanding that I was doing that, or not understanding the value of the credit being good, right? So things happen in life, and certain things did happen in my life where I was not able to pay ran up the credit card, wasn't able to pay it off. My credit went down the drain, and then that's when I started to see, okay, it's starting to affect different things. If I was going to move somewhere, they're going to pull my credit. I'm going to rent an apartment, rent a condo, want to buy someplace, buy a car, they're going to pull your credit. When they pull your credit and they see that your credit is not in good standing, you have derogatory credit, like that means you've missed payments or you just haven't paid anything, then your credit score has gone down the drain, and now everybody looks at you through the eyes of you being someone that's not good with credit. Credit, 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 right? What is credit? Credit is really money management, is really what it is. But it's managing money that is lent to you. So a lender lends you money and you pay that money back to that lender. And you establish a credit history in the way that you pay that money back. It's really what credit is. Advancing funds to you with the understanding that you are going to be responsible to pay that money back. And in doing that, you are establishing a credit history. So for young people, what I generally will tell a young person, if you're just starting out, left high school, either you're going to go to college, you're going to go to university, or you're going to start working. Those are three things that are going to happen once you finish high school. So in doing that, when you go out and get your first credit card, what I would generally say is use that credit card to pay a bill. One of the number one bills that young people have is their cell phone bill. So you have a cell phone bill. Monthly, you have that bill that you're paying, usually with cash. When you get a credit card, take the credit card and pay the bill. When you pay the bill with the credit card, turn around and then pay the credit card back off so that you do not carry a balance. Carrying a balance on a credit card is how you end up paying interest, right? And interest is the amount of money that you're paying on top of the money that you owe. So you're paying back more money than what you actually borrowed. So in order not to pay interest, what you need to do is to pay off the balance every month before the due date. And these are all terminologies that you're going to learn and understand as I go through and teach you different things about credit management with regards to credit literacy, understanding the terminology with regards to your credit report and all of that. But again, I don't want it to be boring. So I want to move at a speed that is comfortable for you. I would like you guys to send questions to me via direct message on Instagram or through my website, FORVANFinancialShow.com. You can ask questions and I'll be able to answer questions in the upcoming broadcasts. But for sure, the credit report is the most important report card that you will ever see. And nobody's going to tell you that, but I'm going to tell you that because I live in the real world. I work with real issues, real people who have real debt. And it doesn't matter whether you are an executive, you are an accountant, or you are working at Tim Hortons or McDonald's. Your credit report is important, and it is how the banking system sees you. So the lender, the only way they're going to know whether they can trust you with money is to look at your credit report and the history that you have established on your credit report. And generally, to really establish a foundation in your credit, it's 2 years. The credit score that's really reflecting on your credit report is a reflection of 2 years ago. How did you manage your credit 2 years ago? It's an indication of how you're going to manage it now, right? So starting off from right out gate, you guys got to make sure you manage your credit effectively. Don't get into the bad credit category and feel comfortable. For example, lots of people say, oh, I have bad credit, and they just joke about it. It's no big deal because they don't understand the value of having excellent credit. It really is what will set you apart as you go about in your life journey to do the things that you want to do. Whatever it is, for me, with my business, any client that sits in front of me, I educate them about starting their own business. I believe everyone should have their own business. Doesn't matter what it is that you do in life, everybody should have their own business. And starting your own business when you have excellent credit as a foundation is something that's very easy to do. But when you don't have excellent credit, it's something that's challenging to do. And a majority of the time, most people who are starting off in their own business or would like to start their own business don't have the credit foundation in place, and it makes it more challenging for them to start their business, especially with not having the right knowledge around credit management. Once you manage credit effectively, there's so much things that doors will open up for you, and limitations that you won't experience if you are in the process of managing credit effectively. So something as simple as getting that credit card, paying your phone bill, if you have a vehicle and there's certain bills that come up and you pay it, make sure that you pay the balance off so that you do not carry a balance, which would mean that you don't have interest that you're paying on the debt that you're carrying, right? Also, to understand the importance of lending, like the value of lending, to be able to receive funds, to be able to invest in, for example, your business, or I'm always going to talk about business, but business for me is in a lot of different categories, right? That can be investing, that can be investing. Sorry. Sorry. So I have a little guy who just woke up and should be over there. Come on. Come on. Hey. So this is one of my sons, and I guess I didn't go into that detail, but I actually have quite a few children. If you look on my Instagram page, my personal Instagram page, you'll see that I'm a mother of 9, and this is my youngest, Matthias, and he just woke up at 3 o'clock in the morning, which doesn't usually happen, but lost my train of thought. But basically, I just want you guys to understand the importance of managing credit, and we're going to be going into credit 101. I'm going to teach you about some basic fundamentals of credit management, as get you to understand how that managing the credit will be able to help you guys do a lot of things. Whatever it is that you can think of that you want to do, once you leave school, once you get into your career, whether it be traveling or purchasing a house or anything like that, everything revolves around credit. Unless you have money, you come from an established background where money's not an issue for you, and you have money to buy everything cash, then even in that regard, you still have to establish credit, because the credit report is something that is constantly pulled by the banks, by even car insurance. People are having their credit report pulled for car insurance. If you want to get insurance for your vehicle, they're going to pull your credit to see how you manage money. Because if you don't manage money properly, then they'll see you as a high risk of somebody who's going to lapse your insurance policy, right? And if you lapse your insurance policy for car insurance, then they're going to be charging you higher premiums, right? So credit, it travels through various different financial industries, and it catches up to you in some way, shape, or form if you're not managing it properly. The other thing is that if you do not have credit, so let's say that you do have money to buy what you want, so you don't need credit, you can go and buy everything cash. Not having a credit score is basically the same thing as having bad credit from the perspective of a lender. Okay, so let's say financially everything is set for you in the sense of you're not having to worry about money. You got cash on hand for whatever it is that you want to buy, but you want to start a business up. So you have the funds to start up your business because money is not an issue for you. But let's say you want to take your business to another level, for example. So you need to have access to more funds. So now you're looking at, okay, let me get a business loan, for example. Um, to get a business loan, you have to first, like, the banks will look at your personal credit before they look at your business credit, right? So if you don't have established credit, then that now becomes an issue. Because again, the credit is, your credit report is a reflection of how you manage money. The banks are looking at that to say whether you are worthy to be lent money, right? So if there is no history, then there's nothing for them to look at. So not having a credit score is bad, and having bad credit is bad. So the two are in one, which some people are really confused about that. So that's why I say that even if you're not going to be using credit for any reason other than just to establish a credit score, make sure you use the credit card to pay a bill and then pay it back off. Pay a bill, pay it back off. I have been in the position to manage bank accounts in the sense of closing out bank accounts and transferring them over, and I've seen that people who are in a certain class financially, that's basically what they do. If you're like young people, if you seriously pay attention when you're watching movies and you see like wealthy people in the movies and they're paying for things. Do you see them paying for things with cash? I'm waiting for. Majority of the times you're going to see they're using a credit card. And I know that this is something that you don't think about. It just goes over your head. It's like, who cares, whatever. But when you really sit down and really think about it, why do they pay for things with a credit card when they have money they can pay cash? There's a reason, right? There is a reason. So understanding that your credit is important. So like I said, if it's just to pay your phone bill with the credit card and then pay the balance back off. You will be establishing excellent credit, and at the time when you need to access credit, and you go to the bank to apply for a loan or a line of credit or whatever the case may be, you'll be approved. You'll be approved without question because you'll have this excellent credit, and you won't even know why. So if you don't take anything else from me in the next few episodes, if it's going over your head, if I'm going too fast, take this credit card, pay off your monthly bill, which is your cell phone bill. That's the thing that comes to my mind for young people. Everybody has their cell phone. You have your cell phone, you have to pay a monthly bill, pay it with your credit card, and then go and pay back off the credit card every single month before the due date. And you will not pay interest for one, and you will establish excellent credit for two. And the due date is something that is very important to understand as well. With credit, when you have a loan and the bank gives you a loan, there's a date that they've established that is your due date monthly, that you are to pay a minimum monthly payment. So let's say you get a $500 credit card, and the minimum monthly payment for that $500 credit card is $10, right? You have not used $500, for example, because you're paying off the balance every month. So let's say your phone bill is $48 every month is your phone bill, right? So you take your credit card, you pay the $48, and then you go and you pay back that $48 to the credit card, right? So it's important though that you pay back the $48 before your due date, because if the due date passes and you don't pay the $48 back, then you're going to be starting to be charged interest. As well, you will have missed your due date. So if you miss your due date, that means that's considered late. And if you're late in making your payment, then that means that you are not managing your credit properly. and it will make your credit score go down. So the due date is a very important point for you to understand in credit management. If you do not pay your bills on or before the due date, then you will be establishing poor credit. So I've had clients who say to me, I just paid $400 on my credit card bill, right? Why is it that it's showing that I have bad credit? And then I will say to them, did you pay the $400 before the due date? Well, no, we never paid before the due date, but still, we paid $400, right? So, it's more than the minimum monthly payment. I said, yes, it's more than the minimum monthly payment, but you have to pay it on the due date or before the due date, because if you do not, then it's going to be considered late. Doesn't matter how much you pay. If you do not pay it before the due date, it's going to be considered late, and it will reflect as poor management of credit, right? So these simple things that I've seen over the years, that people don't seem to really understand because nobody's really told them. It's really just that simple. Nobody's really told them. I've sat with so many different people, and been through. Thanks, love. Been to various different organizations and worked with different clientele, right? And everybody's in the same boat, basically. Everybody is in the same boat, not understanding credit, the importance of it, and not understanding how to effectively manage it, especially when they have multiple accounts. It just gets confusing for them. They pay a bill here, they pay a bill there, and then things kind of just snowball downhill after a while if you're not managing it effectively, right? So today, that's what I want you guys to understand. I want you to understand to make sure you pay that minimum monthly payment on time, but more so just pay off the balance altogether. As a young person, if you get into the habit of paying the balance off altogether, you will establish excellent credit, and you won't even realize that you're doing it. It's just a habit that you're in, and you'll continue it as you go on. Okay, so I'm just going to end our session today, this morning. It's the first session. I have a lot to discuss, but I'm just going to end it